please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, what a day it is turning out to be so far. It's now in the red, 1 point change down on the Nifty, sharp cut at open, big bounce, which at the day high took Nifty plus 75 points, and now from plus 75, minus 5. So, I mean, it's, you know, as they say, maybe we live in interesting times, and this is more than interesting, more than some would be able to take, for sure. Look at what's happening with Yes Bank. It made a low of about 197 rupees, I mean, actually. And all of this happened, I think, in the last, 10-15 minutes or so. Sharp cut. I mean, it's almost sort of the bottom fell out on the stock. It was stable at about 230, 235 or so for most of the time before that, the first initial couple of hours of trade. And then it just started going one way and became a big trending kind of a move. Still about 7% lower is what we have on Yes Bank. My colleague Anisha is going to present the show. Anisha, afternoon. We also have Ritu, who's joining in on Yes Bank. So let's straight away sort of bring Ritu in. Ritu, I mean, the decision is out or what? I mean, the way the stock is moving.
You know, this is official communication from the bank itself that the board meeting for the selection or the decision on the future course of action on the new CEO, etc., that will start at 4 p.m. That is the communication that we have received. So no, you know, there is no official news as of now that would have caused that reaction in the stock, not that we are aware of. But that said, you know, these are the two key items on the agenda. One is, of course, who replaces Rana Kapoor when he leaves the bank at the end of January 2019, and what will Rana Kapoor's role be once he steps down as MD and CEO. On the first one, you know, we understand that there will be an independent search committee that will be appointed today. Perhaps by the end of today, the board meeting will take a decision on whether or not an external agency, you know, a headhunting firm will also be roped in to find candidates among internal candidates. Rajat Monga and Pranay Mondal, you know, these are senior people at the bank. They've been associated with the bank for a long time. They are seen as strong contenders. Among outsiders, we don't know yet, you know, who they'd be. But that said, RBI will have the final say on who eventually becomes the CEO. But, you know, there is a problem here as well. The articles of association of the bank say that the joint promoters, that is Madhu Kapoor and Rana Kapoor, have the right to jointly nominate a CEO candidate. Will they or will they not choose to exercise that right? That we don't know yet. The second thing is on the future of Rana Kapoor in the bank itself. You know, many say by virtue of being the MD and CEO of the bank, and this is legal sources that we've spoken to, he's also the whole-time director, and his removal as MD and CEO tantamounts to him being removed as a whole-time director. Now, the Banking Regulation Act is very clear on this. The removal of a person as whole-time director amounts to his removal as a director, and he cannot be appointed to the board of that company for the next 4 years at least from the date of his removal. But this conflicts with the article of association of the bank, which is under the Companies Act, that says that he's not liable for rotation, he's not liable to retire. So, you know, generally the rule is that the Banking Regulation Act should supersede the Companies Act. But that is something that I suppose the bank and Rana Kapoor would want to seek legal opinion on. In either case, you know, a lot of the market watchers, the industry people that we spoke to, they do believe this could end up in the courtroom if it comes to Rana Kapoor losing his board position. You know, he's not one to give it up easily.
Okay, so looks like the street is not liking the fact that the meeting has been postponed to 4 p.m. and the uncertainty really continues on Yes Bank, and as a result, that one is 15% of the day's high. But let's move on and talk about markets, because it's a lot volatile for the markets as well. Ashwini Gujral of ashwinigujral.com joins us now with his top technical tips. Ashwini, good afternoon. You had been telling us that every recovery perhaps would be sold into, and as of now, that texture is kind of playing out. What's your sense for the rest of the day? Do you think we'll end at the low point?
Well, the next couple of hours are likely to be fairly brutal, because now Reliance Industries is also joined in on the downside. The banks have more or less completed their upside, and the bank Nifty, you know, the day's low is about 24,750. We are fast heading there. But really what gives you the indication is the way, you know, these NBFCs have fallen 25%, 15%, that after big falls. So, you know, there are linkages. You can't say that the banks will not fall and only NBFCs will fall. So my sense is that you could have fairly strong selling going into the close, because the market's done with its pullback. There is no good news. And I wouldn't be surprised if Nifty does another 100-point downside and the Bank Nifty maybe does 300, 350. So this is your time to get short on the market. And again, the momentum is picking up on the downside. Having said that, Yes Bank, whatever happens, that's a sell with a stop of 212, target of 200. PNB is a sell with a stop of 68, target of 60. And Biocon is a buy with a stop of 680, target of 705.
Ashwini, look at, just to stay on Ashwini, just coming to you, DHFL, this is what Ashwini is referring to, 25% gone, I think at about 295 now, at the day's low, absolutely at the day's low. Look at Indiabulls Housing, 15% gone, at about 836 or so. So that is turning out to be, getting absolutely crushed. Canfin Homes will come up on your screen, that is down 10%. Plus, so about 241 on Canfin Homes. GRU is down 6%. So I think GRU is also at the day's low. 2 rupees away, ₹1.50 away from the day's low on GRU. GIC Housing Finance will come up. That is down 5%. Again, that is also at the, that is at the lows, some 50 paise off the lows. So that's essentially what's happening on housing finance companies. And then you look at the broader NBFC space. So L&T Finance, 6% lower, 122. Muthoot Capital is down 5%, 875. Capital First will come up on your screen, down 4.5%, 498. Shriram City is down 3.5. Motilal is down 3.25. And, this is, of course, changed from yesterday's close, but the reversals from today's highs are also pretty large. Ashwini, anything stands out here, or, there's no differentiation. It's all just getting sold as a basket.
Well, it only means that all the explanations that people are giving, they're not cutting ice. And that just means that, there is an across-the-board sell-off. It is not because of some X, Y, Z event. It is because something has changed in the financial space and it's getting a D-rating. People are now going underweighted. And since it's been, long, people have been long for so long, and even at lower levels, even at 200-day moving averages, even after 50% corrections, the market is unable to find buying. So chances are that this kind of momentum will be difficult to stop unless it's given some external jolt.
Well, yeah, momentum looks difficult to stop, and keep an eye out on the mid-cap space because the Nifty mid-cap index is down about 240 points, sitting closer to the low point of the day, and the Bank Nifty also down about 160 points. And even if you look at the advance decline ratio, now there are 570 stocks advancing for every 1,500 stocks declining. So it looks like the losses on the Nifty and the markets extending, Prashant.
Oh, absolutely. Ashwini, if you leave the NBFCs and the financials, you steer completely clear of them. Is there any opportunity anywhere?
If this is going to extend on the downside, I'll be very surprised if something will not come off. So, if you buy, say, Hindustan Unilever today, if we are going to 10,200, obviously it will be again lower. Plus, there's this whole inflation scenario which impacts everybody. It's not just financials or banks that basically derates, the overall country. So that way, my sense is that given the way crude is moving, rupee is moving, I think there is much more downside. And don't try to be brave. There will be many opportunities to buy. It's not like market will one day open 1,000 points higher. But for the moment, this momentum on the downside must stop before you can buy anything.
Ashwini, thanks very much. Appreciate you joining in. We catch up on the top of 2:30 closing bell. We started at 1:30 with the Nifty absolutely flat. There was no change on the Nifty. We were just coming from positive into negative, and now we're down 45. It's just the ease with which the market is just falling, which is typical of phases like this, episodes like this. Not the first time we've seen this, and definitely not the last time, but it is what it is. 50 lower, 10,917 is what the Nifty is at, and now down 50. So I mean, this can move very, very quickly.
Well, the Nifty continues to see a cut of around 35 points. The Bank Nifty down about 136 points. And if you look at the mid-cap space, now that one is coming in a bit of pressure, down about 200 points on that one. And pull up the contribution chart. Now, most of the cut on the Nifty is actually coming in from 3 stocks. Reliance is one stock that suddenly saw a sharp fall of around 3%. That has recovered from the low point, but still continues to put a pressure of close to 20 points on the Nifty. And Indiabulls Housing Finance as well as Yes Bank and ICICI Bank, as we have been pointing out, adding to the pressure on the Nifty. But the other worrying factor for the markets has been crude prices. Now, crude prices as well as trade concerns continue to dominate the headlines across the globe. To discuss more on this subject, Bruno Verstraete of Lakefield Partners joins us now on the phone line from Zurich. Bruno, thank you so much for joining us. The crude overnight moved around 3%. Right now as well, it's hovering around the level of 81.5. Given the fact that there's impending Iran sanctions that are looming on us, do you expect the crude price to cool off a tad bit in the near term or not at all?
Well, I think that's a bit depending on the political rhetoric that we will see in the days to come. It's clear that there is tension building up in that space, and that is the reason why oil has come quite a bit under upside pressure. We might not see any cooling down of that, because I think there's some speculative flows that start to move into that space. Also a bit as a hedge against inflation. It's clear that commodities are a very good hedge, and I think some institutional investors are positioning a bit back into commodities, and that could, of course, also lead to price increases.
Okay, Bruno, then other than that, the other concern for the markets has been trade war concerns. Now, China has walked out of the talks with the US. Do you see that escalating further? Because today as well, we heard some comments from the Chinese authorities on that. What's your take on the trade war?
Well, I think in the end, it would be in the benefit of China to sit around the table and look at it. In the end, the US is still a net buyer of a lot of Chinese goods. I think that needs to be looked at in that respect. And I think eventually they might want to do that. So I don't think that the talks are over. It's a part of the negotiation, I believe. In the end, it's not clear who's going to be the winner and the loser. The next earnings will clearly tell which direction that goes.
So, Bruno, as a result of this, we have seen that there have been outflows from the emerging markets. We have been hearing analysts talking about how there have increased inflows in the US. What's your take in terms of developed markets versus emerging market now?
Well, I think emerging markets are still having a clear benefit over the developed markets at this stage, which is that, first of all, they're cheap. And second of all, I think the leading indicators are clearly pointing to the upside, mainly in the Asian emerging markets. That seems to be picked up by international investors, and slowly but surely you see some positive comments trickling in that emerging markets equity in the first place is a clear buy, and also corporate bonds seems to be picked up in emerging markets. So I think the flow is definitely not dead yet. By the way, I think the commodity prices could help to accelerate these flows back into the emerging markets, and then mainly into the Latin American emerging markets. But I think this is clearly, albeit a bit of a speculative trade at this stage, not dead yet because of Turkey and Argentina.
Well, yeah, you talked about Turkey and Argentina, and one of the key, factors and everything that we were watching out was the currency move. Rupee has seen quite a bit of depreciation this year, and that's the case with the entire emerging market currency space as well. Any word that you could comment on the currency picture as well?
Well, it's clear. I think the flows out of the emerging markets have caused the currencies to go down, which is going to help and stimulate the economies to export, and they are very export-oriented. It will help their economies more than it will hurt them. What needs to be checked, and that is very dispersed as a picture, is how much the inflation is going to be in each individual country. As soon as that runs out of hand, I think then you should not invest in it. But at this stage, we don't see that happening in most of the important emerging markets.
Okay, Bruno, thank you so much for your time and perspective.
Okay, just a quick look at the market. 40 points lower right now, 10,926. So it's not turning out to be a one-way trending kind of a day. It looked like it could turn out that way when we were down 50 very quickly. I mean, 50 points in about, what, 12, 13 minutes from when we started the show at 1:30. But it's been halted just a little bit. It could pick up. So it's extremely fluid as things stand right now. I mean, we should put up yes. So after reaching 197, it's bounced back a little bit, just a little bit. 213 or so is where we are at on Yes Bank. NBFCs, I mean, I listed what? Some 12, 13 NBFC stocks, housing finance and other NBFCs, which are selling off big time. DHFL, of course, leading the pack, followed by Indiabulls Housing. We spoke with Credit Suisse's top analyst, Ashish Gupta, who tracks the financial space. And these are his thoughts on where this could head from here. I mean, his thoughts on liquidity for NBFCs, whether there could be a bit of a crunch going forward or whether these concerns are exaggerated. Listen in.
I still believe that the overall liquidity situation at NBFC is still fairly manageable. We have seen in the past RBI coming in and at the time of crisis on liquidity, putting in steps like opening up the repo window for the mutual fund, etc. So I think concerns that this liquidity constraint will cascade into distress into NBFCs is probably exaggerated. On the corporate asset quality side, we have made very good progress in terms of recognition. More than 80-85% of corporate asset quality stress is recognized. For sure, NBFCs will see a higher increase in funding costs relative to the banks, and therefore it is important that if they are in a product segment where their competitors are banks or other NBFCs.
Okay, so concerns regarding the liquidity crunch are over-exaggerated. That's the word coming in from Credit Suisse. But earlier today, we also spoke to Ramesh Iyer, the Vice Chairman and MD of M&M Financial Services, on NBFC stocks losing ground in trade. Take a look.
If you're working in a segment which is highly competitive, where you're not able to pass on your cost to the consumer, there will be pressure on margin. Which is why, both on the asset and liability side, having a very good product mix is extremely important. Normally, the first and second quarter shows up increasing, NPS, and then they correct in the last two quarters. But this year has been a very different story, and I've said this before. At the end of first quarter, we saw collection efficiency improve. We saw gross NPA come down. The average cost of fund for us still remains at about 8.3, 8.4, since we had, always a well-matched fund that we've taken, and therefore any new borrowing comes with a new rate, of course, and that comes at about 8.7, 8.8, but the average is still at about 8.3, 8.4. We are at least very clear that we must have the margin orientation very high, and do only as much business that we believe can be done through the cost risk that can be passed on to the consumer. I mean, as a finance company, I don't think we're here to absorb all of that.
Okay, we'll get you more opinion as the day goes along. We are wrapping up this edition of Midcap Radar. From Anisha, me, everyone on the team, thank you very much for staying with us.